Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those giant corporate filings. Today we're diving into Smith Micro Software's latest 10K report, which is like their yearly State of the Union, except way less exciting and full of accounting terms instead of promises. Get ready for a bumpy ride because this report is hinting at some serious trouble. This report covers everything from what Smith Micro actually does to the risks that could send their stock tumbling faster than a clown down a flight of stairs. Think of it as a behind-the-scenes look, except instead of movie magic, it's financial reality. This report is specifically looking at their performance during the year 2024, which is now over, but we are seeing what happened in the past. First, the basic details. As of June, the company's stock held by non-affiliates was worth about $21.5 million. It's good to know this number as a starting point. Time to buckle up. It's time to take a look at what happened last year. It is time for business. Smith Micro provides software that makes mobile life easier for people working with big wireless companies. They offer family safety apps and tools for creating and sharing content, just to name a few of their big areas. Think of it like they sell add-ons for your phone service. The market is tough and the company lists its difficulties. There is a lot of pressure due to the work environment changing and needing to stay secure while working from home and people using their phones all the time. One of the main offers is a Safe Path, which is a way to ensure safety for your family's devices. It can do parental controls and even help teen drivers and their driving. They also can display content to make sure things are displayed correctly in a retail store for advertisement. To sell their services, they leverage the carrier relationships and focus on high growth markets. They want to add new customers worldwide and have been successful in the past. However, here's the big problem. They depend on just a few huge customers. One of their biggest clients dumped them, and that hit them hard, as you might imagine. The report emphasizes that the future is very uncertain for them and lists the different things to watch out for. Because they get so much money from so few people, they have a lot of risk if they lose them or underperform. Their growth also depends on customers launching and delivering products, which is entirely outside of Smith Micro's control. They have to do a lot of planning and amend contracts, which is just waiting around. Like any software company, they're constantly fighting off hackers. If their system gets breached, it could ruin their reputation and expose them to huge liabilities. This is always a major point for any software service. Things are so uncertain that the company itself isn't sure if they can stay in business for the next 12 months without more money coming in. This is a big statement. They might need to sell off parts of a company or secure loans to keep going. Their income can bounce around a lot, making it hard to predict if they'll make money or lose it in any given quarter. It depends on sales numbers and also where the operating expenses are this period. They're stuck relying on wireless carriers, and if that market changes or they can't break into new markets, they could be in serious trouble. They depend on their software being safe and unique, but if it gets copied or they get sued for using someone else's ideas, that could really hurt them. There's only so much they can do to ensure that their trade secrets and code is safe. After a lot of warnings and mentions of NASDAQ, they continue. Let's look at the numbers. Revenues were almost cut in half, going from $40.9 million to $20.6 million. Ouch! A big contract ended and that really hurt. Gross profit was also down, which is not surprising with the crash in revenue. However, as you can imagine, selling and marketing was also down. The research and development is also down, which is not great as the company needs to grow. General admin also dropped. The company had to take measure. And then this is the knockout punch. They took a $24 million hit because they realized their company wasn't worth as much as they thought. This is not great and a major red flag for investors and what is to come. Thankfully, they do have small interest income and they took zero new debt this year. Operating activity shows the company burning $114.3 million in cash this year. This shows the effects of what was discussed earlier. To make up for it, financing activity shows that they managed to raise $9.8 million. They are having to sell company stock. All this leads to a very tight situation, only $2.8 million in cash and cash equivalents. Finally, the company also made a formal rule about insider trading, so people can't buy their own stock using information that the public does not have. Okay, so what's the big picture? Smith Micro is a company in a tough spot. They lost a major customer, and that's causing all sorts of financial problems. They're trying to cut costs and find new revenue, but it's a real uphill battle. The fact that they're questioning if they can even stay in business for the next year is a huge red flag. On the bright side, they are expanding some product lines. They still have other major clients and they can cut costs if they really have to. Plus, the executive team will likely be on the hook to ensure, as a leader in the space, they will work to stay afloat. But the risks are definitely there. A dependence on few customers, rapid tech changes, and a whole lot of uncertainty about the future. It feels like the company will face some tough times, but still has a lifeline. That's all for this episode of Corporate Decoder. If you found this breakdown helpful, please like, subscribe, and leave a comment. It helps me know what kind of corporate filings you want me to decode next.